Namaskar. This is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. The National Statistical Organization, the NSO, yesterday released the data regarding India's economic GDP growth rate for the quarter ended December 2019, and it indicates a continued worrisome slowdown of the Indian economy. In fact, the economy has been slowing, and as we all know, India has now already lost the tag of being the fastest growing large economy in the world. The NSO says that the Indian economy grew by a rate of just 4.7% in the quarter ended December 2019. The third quarter of the financial year, which ends on 31st December, is normally considered to be one where there is a smart pickup in economic activity, and that's because in the third quarter you have the huge festival of Diwali. There is an onset of India's great Indian wedding season, and you also have the Kharif crop that comes in this quarter. Thus, the third quarter is considered to be one where there is brisk economic activity and the GDP growth picks up. And here we have a growth rate of a mere 4.7%. The NSO further predicts that the expected growth rate in the March quarter, March 2020, is going to be just 4.6%, and that's again worrisome. The fourth quarter of the financial year, which ends on 31st March, is considered to be one where maximum economic activity is recorded, and we are talking about a growth rate of a mere 4.6%. And with that, FY 2020 for India will end with a growth rate of a mere 5%. At this rate, we need to forget our $5 trillion dream that the government has set for ourselves. A 5% growth rate is just not enough to even pull out India's teeming millions out of the poverty that we face. The economy did record a positive growth rate in the service sector, which has been growing at the rate of 6%. And because of the bountiful monsoon that we had this year, even the agri output was certainly on a good wicket, but that was not enough to pull the economy out of the slowdown that we face. What fell was growth in the manufacturing sector. It dipped by 0.3%. It was a minus 0.3%. There was a dip in electricity sector, minus 0.7%. And even construction, which is considered to be a locomotive sector, recorded a growth rate of a mere 0.3%. That means if we grow by a mere 5% in FY 2020, it will be the slowest growth of the Indian economy since the economic meltdown of the world in 2008-2009. Despite these kind of dismal figures coming out, the government experts think that India's economic growth rate has bottomed out and that it will now only go upwards henceforth. The Economic Affairs Secretary Mr. Atanu Chakrabarti says that the slowdown in the Indian economy has bottomed out, and he says that by alluding to the 2.2% growth rate that took place in the core sector, which consists of manufacturing and others, he thinks that's good enough to say that the slowdown has bottomed out and things will pick up henceforth. A State Bank of India managing director says that all the budget measures are expected to have a positive effect on the economic growth. The economy will receive a boost, and he thinks that agri growth will pick up, infrastructure will pick up, and FDI in the country will also look up. Thus, the government may once expectedly think that the slowdown has bottomed out. And to add that is of course the misplaced optimism of a finance minister. A few weeks ago, she had said in the parliament that she sees green shoots of recovery. Of course, they were not visible to any of us. And now she says that the Indian economy is a steady ship and it is moving in the right direction, and that because it is steady, it is now only going to move ahead with a lot of confidence. We again think that these kind of statements are not really backed by the ground reality, which is completely different. The slowdown continues and the confidence of investors and consumers remains as low as it was. And why do we say that the slowdown continues and that the slowdown has not yet bottomed out as the government experts like us to believe. The first reason why we think that economic slowdown has not bottomed out and that the worst is yet to come, or at least the slowdown will continue, is because of a new kid on the block, which is the coronavirus. With 80,000 persons infected worldwide in 53 countries, it has now become a pandemic. Right from an Italy to a China to an Indonesia to a Singapore, we are witnessing an upsurge in the coronavirus and global economic activity has been hit. There is nervousness all around such that there was a bloodbath in the global stock markets, including in the Indian stock markets yesterday. Market capitalization in India yesterday evaporated by over 5 lakh crores in a single day and the indices fell by 3.64%. The global economy has certainly been disrupted by the coronavirus and the demand supply factors are now extremely uncertain. And that is not just impacting the global economy, it is certainly impacting the Indian economy also in an adverse manner. Thus, the first reason why it will continue to slow down or it will not improve is the coronavirus. The former RBI Governor Raghuram Rajan just rightly says it is first most important to tackle the pandemic of coronavirus than think of anything else in case we want the economic situation to improve. Thus, because of this factor, international trade has been uncertain, it has been receding. Demand supply factors have gone haywire and that is already impacting India's imports and India's exports also. That means India's GDP is not going to see any improvement on account of its international trade. Indian economy is going to suffer as the global economy is suffering. Again, as a further offshoot of all this has been that the consumer demand has not been looking up and we are seeing this impact on two aspects. First of all, household incomes falling, consumer demand not picking up was one of the reasons why the slowdown continues, and that is reflecting on private investments. Private sector investments, new investments in the economy continue at a multi-year low. There is no confidence of investors to invest, and until that doesn't pick up, we are not going to see a sustainable pickup in India's GDP growth. The investors need to come back, but why should they come back? Because of the slowdown in the consumption expenditure, the average capacity utilization across industries in India today is a mere 69%. And when there is surplus capacity, any chances of fresh investments are completely ruled out. Thus, private investments remain low unless they don't improve. Don't expect an improvement in the economic growth rate of India. Because of falling tax revenues, yet another pillar of India's economy, which is government spending, has also been subdued in this quarter. Government spending has been restrained, tax collections are not meeting their target, and one was expecting that because of a fiscal stimulus, because of government spending, the economic growth rate will receive a boost, as we are seeing in the December quarter and the prediction of NSO for the March quarter. Nothing like this is happening. And there is certainly no chances of improvement in tax collections happening at a time when the economy has been slowing down. All this is further reflecting in credit growth. Credit growth in this period has been a mere 6.3%. That clearly indicates that economic activity has not been brisk. There are no takers even if the cost of funds is going down, and the governments are also in no position to lend, also because NPA crisis remains untackled. In fact, you can see an upsurge in the NPAs in India, particularly on account of the MSME sector and the agri sector very soon. With the banking sector not in the best of shape, economic activity has thus been suffering. And for none of these, we are seeing any immediate improvement in the foreseeable future. The government has been banking on rural growth to be one of the reasons, but then that's not a sustainable factor. If we have another couple of poor monsoons in India, we will see all the expectations of economic growth picking up on account of the rural prosperity because of a better agri production soon evaporating. Thus, rural growth is not really durable in India because of its dependence on monsoon, and thus even that is not going to look up. So what are we talking? We are talking about not seeing the green shoots of recovery. We are talking about the slowdown not having bottomed out, and we are certainly talking that the slowdown will continue for a couple of more quarters before we think it has stabilized and the economy will look up. Tough times for all of us. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.